Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now, on last week's commodity report, we identified with you the potential for a pullback across the precious metals at the start of the week, with end of quarter profit taking, which would inevitably present you with an incredible opportunity to buy back into the dip, especially into the lead up to the Basel III regulation, which took place later on in the week, where this was implemented in the US, with gold becoming reclassified from a tier 3 asset to a tier 1 asset. Once again, both of these provided very profitable opportunities for you to capitalize on, which played out exactly as predicted. We saw a slingshot move higher later on in the week in the metals, with gold, silver, platinum, palladium and copper all rallying significantly higher over Thursday and Friday as we moved into a new quarter and as Basel III regulation came into effect. So with that, the volatility created big opportunities again, and right now as traders we are living in some of the most exciting and rewarding times ever in history. Banks and hedge funds, they're making multi-billions by capitalizing on the week-to-week volatility, and it's no different for the retail market. The majority of our clients at the Gold and Silver Club, using our proprietary research-driven trading approach to the market, they've already made in excess of 6 and 7 figures so far this year, and we're only 6 months through the year. Right now we're banking consistently 10,000 points per month with our clients at the Gold and Silver Club, which we've been discussing with you throughout our weekly videos. So essentially, for every one lot contract that you would be trading, 10,000 points profit, that's $100,000 of profit. And for every 10 lot contract that you would be trading with 10,000 points profit, that's $1 million of profit that you can be capitalizing on. In fact, here are some of the testimonials from our clients at the Gold and Silver Club sharing their success stories and achievements. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link below today's report in order to make an application to join our professional mentorship program. Now, as we go into next week, one of the biggest events will be Wednesday's Federal Reserve Monetary Policy Meeting Minutes, which will be scheduled later on in the US session. Now, the FOMC Minutes, they can be one of the biggest market moving events, especially if the meeting notes, they contradict anything we've heard from the Fed so far. Right now, the market is highly sensitive to any insights from the Federal Reserve, and that again can be a catalyst for an explosive move on commodities. Oil prices, which are a key indicator of rising inflation, they will be closely watched by traders on the FOMC minutes when they get released. Oil prices, they've gained for a 6th straight week to post their biggest quarterly advance since 2010 as inflation continues to surge. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. So firstly, Palladium. This is a trade setup that we identified with you 2 weeks ago as a great buy opportunity after the FOMC statement, where Palladium prices broke down by over 4,000 points within 24 hours after that FOMC statement. And with that, that provided a fantastic opportunity to buy in on that sell-off, which we identified with you in detail 2 weeks ago. Feel free to go back and watch that commodity report, which was highlighted to you just 2 weeks ago. Since then, we've capitalized on Palladium on the slingshot move higher. In fact, ourselves and our clients at the Gold and Silver Club, we're currently up on our 2 positions, just under 6,000 points here into the close on Friday. We've seen a complete V-shaped reversal within the last couple of weeks, and it comes back to exactly what we stated with you previously. Nothing has changed here. You want to make sure that you're benefiting on these sell-offs to buy back in much lower in order to take advantage of all of the infrastructure spending which is to come from the USA for industrial metals here, alongside inflation, which is running hot, and a low interest rate environment. All of this provides a perfect catalyst for industrial metals to do very well as we go through this super cycle in 2021. Let's actually move it over to the energies as well, because between our energy positions, just over a week and a half ago, we banked 10,100 points profit on those positions that we continue to capitalize on throughout the last quarter. We've now banked that trade. That's all been been booked with our profits, with our clients at the Gold and Silver Club. That was a huge trade. You can see where oil prices last week broke out to 3-year highs, and this ended up being a fantastic opportunity to capitalize on. And again, we've seen oil prices over the last year, they've rallied over 280%. So it's been phenomenal to capitalize on this over the last quarter and really lock in those solid profits over the last week here as well. So then moving over to gold here, and this is where we identified this with you in detail on last week's gold asset of the day, that the zones that we were looking for were buying opportunities if we were to come back down towards 1,750 US dollars per ounce. This is where we bought on Wednesday into gold, and we were looking for a move back towards the upper end of our ranges, which would be towards 1,800. And in fact, you can see here on gold on Friday spiked to 1,795 US dollars per ounce when most of the market was getting ultra bearish on gold, predicting lower prices, retail traders panic selling, and essentially gold has followed our expectation, which was at the start of last week to be under pressure at the end of a quarter with rebalancing of portfolios. We saw the dollar gain strength, and then later on in the week, from the very first day of a new quarter, 1st of July on Thursday, and Basel III regulation being implemented in the USA, with gold moving from a tier 3 asset to a tier 1 asset, we've seen that slingshot move higher on gold here, which essentially from the lows of the week has moved over 450 points. So I do hope that you are able to capitalize on that. Certainly we did with our clients at the Gold and Silver Club. That's been a really solid move into Friday's close. Again, just go back through Tuesday's gold asset of the day. We talked you through all of this in a lot of detail. And again, that's the power of understanding the cycles in the market, not using outdated technical analysis strategies which just don't work in these market conditions. Everybody is taught technical analysis to begin with. You have to evolve from that. Again, there is nothing special about only using technical analysis in the market. We see it time and time again. Retail traders who only focus on technicals keep getting chopped up in these market conditions because they're not looking at enough data, market intelligence, facts, statistics, cycles. They just haven't got enough insight when they're executing their trades, and they end up losing a lot of money, which we definitely do not want for you. So with that, let's now move it over to silver. So you can see here again, we discussed with you last week on silver asset of the day that between 25 to 26 US dollars per ounce, this is the accumulation zone for silver, that we like silver at 26 US dollars per ounce or under for a buy. We've continued to stack on these dips, on these sell-offs. You can see the lowest price that silver got to last week was down towards $25.50 per ounce. We then broken out later on in the session on Friday. We have a solid basing formation here. So again, the same really holds true, that we still like silver for a buy at $26 per ounce or lower. We've continued to build positions over the last quarter on this market. Again, we bought into dips here, and we are looking for higher prices as we continue to go through the next quarter as well. So then moving over to platinum, again, we built into another position on this market last week. We had an opportunity to take advantage of that selling pressure that we got at the start of last week over Monday, Tuesday and Wednesday with the end of quarter outflows. We then built into that on the dips, and those trades have also moved into profit into Friday's close, and looks good here as we head into a new week. And then finally, if we move over to copper, you can see the same price action, basing formation, consolidation, which is setting up for a breakout move as we go into the month of July. Very simply, you can see the price structure here that we've got on copper at the moment, which is building up a nice little base. You've got a bull flag continuation pattern in play at the moment, and I would be looking to take advantage of this as we go into next week for a continuation back towards the previous levels that were broken down from during the month of May. Now, a couple more points here just on gold and silver at the moment before we go into a new week. It is a public holiday on Monday, and we have also seen 3 days of consecutive gains here on the metals. So it's not uncommon on a US public holiday where the USA will be closed for trading to see exaggerated moves in the market. So of course, what you could see is after 1, 2, 3 days of gains, we may get a pause here on Monday, some consolidation, and then a continuation as we head towards the end of the week and as we progress throughout the month of July. Or Because of it being a US bank holiday, this can also create exaggerated moves to the upside. And if we do break above Friday's highs, we could start to push quite quickly here to the upside. We're certainly positioned for this, but I will just put that on your radar. When there is a public holiday in the USA, that lack of liquidity in the markets during the US session can create exaggerated moves. So we wouldn't panic, for example, if you do get a pause after 3 days of upside here on the metals, but at the same time, you could also see an exaggerated move to the upside if we do break above Friday's highs here due to lack of liquidity in the market. This could also be quite a fast breakout. So I just put that on your radar as we go into next week. And again, we've seen it so many times out there recently where uneducated technical traders in the market have been unfortunately taught outdated technical strategies, gimmicky indicators which just do not work in these market conditions. It's one of the laziest ways to trade. Everyone is taught how to trade technical analysis initially, and of course all the market makers, hedge funds, banks, institutions, they all know that. They know how the retail market is taught to trade, and as a result, very often those traders are very often faded in the market. So what that means is it's so obvious what those retail traders are looking at for their technical confirmation that they are targeted by market makers and subsequently constantly getting stopped out of their trade and chopped up. So if you find you keep panic selling out at the low or buying exactly at the high as the market is turning, it is very likely that you are utilizing these outdated technical strategies, especially if you're using very tight stop losses in the market. This will mean you're just constantly getting chopped up with the current volatility. We don't want that for you. We want to make sure that you've got much stronger edge in the market where you are utilizing a professional research-driven approach to the market, trading the same way that the hedge funds, money managers, banks and institutions are utilizing data, our in-house market intelligence. Alongside that, the facts, the statistics in the market, the daily, the weekly, monthly, quarterly cycles in the market, capital flows. Alongside that, the intermarket correlations, the ratios, how the hedge funds, banks, money managers are positioned in the market. That will help you massively understanding key liquidity zones that are targeted, and also the macroeconomics and the key catalysts which will have the biggest impact on commodities. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link below today's report in order to make an application to join our professional mentorship program.